Hello and welcome to Pro Trader Strategies Market Commentary for Monday, May the 23rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had a lot of economic data come out today in the form of flash PMI, which is it comes out about the third week of every month, and it is a precursor to the final ISM manufacturing here in the States and the final PMI numbers throughout the world, for that matter. In Europe, we did get the French flash PMI number, which is Purchasing Managers Index. It's a survey of all of these purchasing managers for the manufacturing sector, and it just gives a bit of an outlook as to what they're seeing in the global economy, what they're seeing for demand in different areas, and whether or not they're seeing inflationary factors and costs of inputs and things of that nature. There's a lot that goes into it, and it is a very important economic data point and very forward-looking. So this is one of the more important ones. Some of the economic data points are, backward-looking in a sense that it's already happened and it doesn't really tell you what's going forward. This tells you what's going forward because it is what the purchasing managers are planning for their manufacturing, whether they're going to ramp it up or they're going to pull it back a little bit. From everything from producing goods to hiring. So it's really important. And the French PMI came in at 48.3, which it's consistently been below 50, and 50 is the line in the sand. Anything above 50 is expansion. Anything below 50 is stagnation or a retraction in the overall economies. So we got that. Services for the French PMI number came in at 51.8, so very reliant on services rather than manufacturing. Manufacturing, in my eyes, is a little bit more important. The German flash PMI came in at 52.4, which was in line with expectations, and the services PMI for Europe in general came in at 53.1, right in line, slightly below, but in line with expectations there. We also had the United States flash PMI for the manufacturing side come in at 50.3. That is just above that line in the sand, but just barely treading above water, and that came in lower than expected. One caveat with that 50.5 was that it is the lowest reading that we have seen since the recovery of October of 2009. So the reason why that was a little bit lower, we saw a reduction in output, lowest since October of 2009, all due to uncertain economic conditions globally. So a lot of these manufacturers are starting to crimp their production. That also was seen through soft client demand here in the United States and slower new business from here and abroad. So new export demand was down. If you want to really dig into this, it can get really pretty scary, I guess, if you will, just because we're planning on raising interest rates and we're seeing a slowdown in all of these numbers. We also saw falling outstanding work 4 months in a row, so that means that there is no more demand, and it keeps continually decreasing. So that is not good. Employment did uptick, but it was just off of the lows that we saw just last month in April, which was a 34-month low. And supplier performance was down, which means the suppliers for the manufacturers are starting to see a slowdown too. So it's not looking too good on the purchasing manufacturing side. So just keep that in mind going forward. Having said all of that, you would think that the overall equities would be rallying off of that, because that would signal that the Fed is not going to go. But we had a couple of Fed governors speaking today. I think Williams spoke and Bullard is speaking or spoke earlier, and they seem to be on pace with a June rate hike. So we'll have to see if that really pans out. So the overall equities here, as you can see, /NQ up 2 points on the day, but right in the middle of the range. On the other side of the coin, we got E-mini S&Ps, which are down on the day by 3 points, but for the most part, we're having an inside day. We're really inside of the range, the stronger part of the range from Friday. As you can see here on the chart for the E-mini S&Ps on a 15-minute chart, we are right inside of the value area that we saw on Friday, which really creates the inside day for the most part. We may have a range that has popped outside of there, but the bulk of the business, the volume has been traded, is inside of what we saw on Friday. Onto a couple of things that I have done. UPS, I took this trade on because it has low implied volatility and it meets the parameters of Steve Primo's strategy number 4, which is usually a quick in and out, if you will. And once the market trades below Friday's low, that was the signal to get in on a bearish trade. So I ended up going in the July and bought the 100 puts for $1.85. So as soon as it gets down to, I think it's like 130 was his mark to get out, that's where I'll be covering those puts. And then on to GDXJ. I put this trade on because we talked about it in Friday's webinar on the front call ratio spreads, and this just really sets up nicely. I'm pretty bearish on gold for the most part, or at least slightly bearish on gold. This is a market neutral to bullish strategy, so I put this on because you can really make money either way. If the market slowly trends higher, I can make money there, and if the market sells off, I make money there as well. So that's a really nice caveat to this strategy. And with the dollar strengthening, I think that we're going to see some weakness in gold, and especially if the Fed decides to increase interest rates. So I went into the June and did the 36-38 call spread, but I did it as a 1x2, which creates that front call ratio spread. So for every 136 call that I bought, I sold 2 of the 38 calls, and I collected 55 cents for that trade. So if gold continues to trend down, then I get to keep that 55 cents. And if gold goes up and basically tests these highs, then I will be able to collect the width of the call spread plus that 55 cents. So that really increases my break even to like $40.55. So gold could go up that high before I am not profitable. But if it rallies up and trades right to 38 at expiration, I'd be able to collect the full width of that spread plus that 55 cents that I collected to initiate that trade. On to Best Buy. Best Buy has earnings on tomorrow morning, so I'm going to be looking at this trade later on today. You can follow me at on Twitter at Wolfman's blog, because that's usually when I tweet out what I've done in these earnings trades. So I usually put that on in the last hour of the day, so I don't like to put it on now because it's not as clean of a number. I like to wait till the last minute to put those in. So that's what I'm going to be looking at, doing something in Best Buy. I'm a little bit going back and forth throughout the day as what I think I'm going to do, because Best Buy has a tendency to really beat on expectations, and it is a pretty unloved stock going into these earnings announcements. So I don't know if I'm going to put on some kind of strangle or if I'm just going to put on a directional play at this point. I'm going to have to see how the overall market trades throughout the day. Oh, and crude oil. So crude oil is coming off. It's gone up there and tested that $50 a barrel area. I've seen it come off several times, I think, on the strength of the dollar, plus Iran continues to crank out the oil. I don't think that they're going to meet any of the OPEC sanctions to limit their production. I think they're really found a niche with China. They've been a big supplier to China, so I don't think that they're going to come into any talks with OPEC anytime soon. We're going to be talking about this on the timingresearch.com show today. I'm going to be meeting with several traders, and we're going to be talking about what we see in the markets, and particularly what we think about this Iran production of oil, and how that's going to affect the prices along with the dollars and everything else. So stay tuned for that. You can go to timingresearch.com, sign up for that, or you can go to protraderstrategies.com and sign up for the webinar that we're going to be doing this Friday, and it's going to be on diagonal call spreads. So go check that out. The more the merrier. We've been having a lot of participation in those, so I hope you can make it. If you can't take that, take it easy.